Welcome back. Now let's go into Market Report 2024 Appropriation Act. The letter read by Speaker Tajuddin Abbas during the plenary session of the House of Representatives outlines that the loan will be part financed through a Eurobond issuance of $1.7 billion and Sukuk financing of $500 million. The request is grounded in the provisions of the Debt Management Office Establishment Act of 2003 and follows approval by the Federal Executive Council. In addition to the borrowing plan, the President submitted the 2025 to 2027 medium-term expenditure framework on November 10, 2024, are essential for the preparation of the 2025 federal budget. Tinubu urged the National Assembly to expedite actions on the proposals to ensure smooth fiscal planning. The President also National Social Register as a primary tool for implementing federal social welfare initiatives. These moves are part of the Tinubu's broader fiscal strategy to address economic challenges, although concerns remain about 9 trillion naira budget. Senate President Godswill Akpabio directed the Committee on Local and Foreign Loans to access the request within 24 hours for swift consideration. Additionally, President Tinubu submitted the medium expenditure framework and fiscal strategy following the passage of the Petroleum Industry Act, which introduced favorable fiscal terms and improved investor confidence. However, this resurgence was short-lived as ongoing divestment by international oil companies caused another decline. To address the downturn, the NUPRC recommended a series of measures aimed at revitalizing exploration activities and boosting reserves. This includes mandating E&P companies to drill at least one exploratory well annually, acquiring seismic data with a minimum record length of 8 seconds TWT, for deeper prospect and reprocessing existing 3D seismic data to enhance subsurface imaging. The regulator also suggested mandatory acquisition of 4D seismic data for fields in production for over a decade and incentivizing deep drilling into high pressure and high temperature zones. Regular bid rounds were also proposed to attract further investment into the sector. The NUPRC emphasized that adopting these strategies could help reverse the declining trend in exploration, secure reserves growth, and strengthen the country's oil and gas industry. Managing Director of the Nigerian Ports Authority, Mohammed Bello Koko Dansoho, has called for greater collaboration to improve trade access for landlocked countries, urging coastal states to help enhance connectivity for smoother cargo transportation. He emphasized the need for sharing technological advancements and information to improve service delivery, particularly between littoral and landlocked countries. Dansoho proposed investing in international highways and rail routes that link coastal and inland regions, ensuring efficient service delivery at reduced cost. He pointed out that Africa is home to 16 of the world's 44 landlocked countries, making it a moral obligation for coastal states to provide them access to the sea. He suggested completing critical international highways such as the Niger, Lagos, Tema, and Abidjan routes to facilitate trade and strengthen. Danso also emphasized the importance of multilateral agreements and investments in port infrastructure and transportation networks to improve regional trade efficiency. The proposed Abidjan to Lagos Highway, part of the Economic Community of West African States initiative, and aligned policies to facilitate seamless cargo movement across the region. He highlighted the interconnectedness of maritime shipping and hinterland operations, noting that overcoming challenges in port operations requires strong connectivity between both sectors. A balanced approach combining infrastructure development, digital transformation, and diplomatic cooperation was identified as crucial to optimizing hinterland connectivity. Mamoudou Biru Diallo, Managing Director of Port Autonomy de Conakry, echoed Dansoho's sentiments, underscoring the importance of robust infrastructure such as roads, railways, and waterways in supporting the growth of ports and ensuring seamless trade flow. Naira appreciated on Tuesday at the financial market, closing at 1,678 Naira 93 kobo to the dollar, a recovery from its previous rate of 1,690 Naira 37 kobo recorded on Monday. This represents a gain of 11 Naira 44 kobo or a 0.67% improvement after 3 days of depreciation. Data from the FMDQ exchange showed that despite the appreciation, the total daily turnover decreased significantly, falling to $128.59 million from the $173.40 million recorded the day before. At the investors and exporters window, the Naira traded within a range of 1,698 Naira to 1,631 Naira against the dollar, reflecting slight variations in market dynamics. Nigeria's foreign trade payments via letters of credit experienced a significant decline of 146.5% year-on-year in the first 9 months of 2024, dropping to $434.05 million from $1.07 billion during the same period in 2023. This data released by the Central Bank of Nigeria reflects a sharp decrease in the use of LCs, a payment mechanism for importing visible goods that relies on bank guarantees rather than upfront cash payments. In the first quarter of 2024, LC payment fell by 15.6% to $204.4 million from $242.23 million in the previous quarter. The decline intensified in Q2 2024 with a 47.3% quarter-on-quarter drop to $107.8 million by Q3 2024. LC payments further declined by 13.9% to $193.8 million compared to $225.06 million in Q3 2023. This downward trend highlights reduced importation activity attributed to rising customer duties, stricter import regulations, and the continued depreciation of the Naira. Production capacity and potential to supply fuel beyond Nigeria. Ghana has expressed petroleum products from Dangote's facility to reduce its reliance on costly European imports, which currently cost the country $400 million monthly. Mustafa Abdul Hamid, chairman of Ghana's National Petroleum Authority, emphasized that importing from Nigeria could lower freight costs and in turn reduce the prices of goods and services. Talks with other African nations including Angola, Namibia, South Africa, Niger, Chad, Burkina Faso, and the Central African Republic are reportedly at advanced stages. While the refinery's gasoline exports remain small on a global scale, the signal is readiness to scale operations and impact regional markets. Recent shipments to Lagos and Togo further underscores the refinery's potential to serve both domestic and international markets. However, it remains unclear how much of its gasoline output will be exported in the long term. This expansion comes as Nigeria's federal government has ended its state oil company's exclusive right to purchase fuel from Dangote's plants, opening up the domestic market to broader competition while still allowing imports from Europe and the US. The Dangote Petroleum Refinery, with a capacity of 650,000 barrels per day, is poised to become a key player in reshaping fuel trade dynamics in Africa. Nigerian equity market sustained its bullish momentum on Tuesday, closing with a significant gain of 136 billion naira. This brought the market capitalization to 59.4 trillion naira, reflecting a 0.23% increase. The All-Share Index rose by the same percentage, closing at 97,972.33 points and achieving a year-to-date growth of 31.02%, a total of 333.95 million. 95 million points and achieving a year-to-date growth of 31.02%. While the trading volume, a total of 333.95 million shares were traded in 9,187 deals, resulting in a market turnover of 6.42 billion naira. While the trading volume declined by 19% compared to the previous session, turnover increased by 20% and the number of deals rose by 2%. The market breadth closed positive, with 38 stores gaining in value while 23 recorded price declines. Leading the gainers was Lafarge Wapco, which saw a 10% increase in its share price to close at 15 naira 60 kobo per share. Unilever Nigeria also recorded a 10% rise, closing at 26 naira 95 kobo. Other notable gainers include Unicel Interlink PLC and Score Nigeria, which both gained 9.94% to close at 14.49 naira and 1 naira 88 kobo per share, respectively. John Holt advanced by 9.89% to close at 9.9 naira 33 kobo, while Tantalizer rose by 9.76%, ending at 0.90 kobo per share. On the other hand, PZ Crescent Nigeria led the losers with a 9.82% drop in its share price, closing at 22 naira 50 kobo. Initiatives PLC followed with an 8.7% decline to 2 naira 10 kobo, while Burger Plants lost 7.71%, ended the day at 17 naira 35 kobo. Honeywell Flour Mills fell by 4.85% to 4 naira 12 kobo. Consolidated Hallmark Insurance lost 4.5% to 1 naira 91 kobo. And Ometech Ventures declined by 4.41% to close at 0.65 kobo per share. In terms of trading volumes, Access Holding recorded the highest activity with 37.8 million shares traded, followed by Jopol Gold with 26.5 million shares. Shams with 23.7 million shares, and Consolidated Hallmark Insurance with 16.4 million shares. The top 30 index rose by 0.22%, while the insurance index recorded a 1.9% surge. The industrial index increased by 0.55%, and the premium index gained 0.54%. Other indices also performed positively, including the oil and gas index, which rose by 0.35%, and the pension index, which advanced by 0.28%. The Nigerian stock market sustained upward trajectory underscores strong investment sentiment driven by gains in key sectors and stocks. Analysts at Maritime Securities Limited have projected that demand for foreign exchange during the festive season would worsen the depreciation of the naira at 33.48%. They warned that the combination of rising food prices driven by increased transportation costs and high consumer demand and the potential impact of flooding on agricultural output would continue to strain the economy. The report also highlighted concerns about the core inflation index driven by rising fuel prices and heightened FX demand during the festive period, which is expected to weaken the naira further. Despite Nigeria's foreign reserves reaching their highest level in 32 months, the naira has been performing poorly across all market segments, with projections indicating that it may weaken further in the short term. Some forecasts suggest that the naira would reach 1,993 naira per dollar by 2028. Bismarck Ruane, a prominent economist, has projected a potential strengthening of the naira by January 2025, suggesting that the current exchange rate is significantly undervalued. He emphasized that a partial recovery of the naira would help reduce inflation and curb excessive money supply in the market. On the official market, the naira weakened by 2.31% to 1,690 naira 37 kobo per dollar, with a daily turnover of $173.14 million, reflecting a 42% decline from the previous session. Business leaders in Nigeria are urging organizations to strengthen their change management capabilities to better navigate the country's volatile economic developments. This was discussed during economic challenges such as inflation, unemployment, and currency devaluation, stability, innovation, and strong change leadership to remain competitive. Rachel Resenfeld, Executive Director at Kota Incorporated, is during crisis. Funke Amobi from Stanbic IBTC Bank emphasized the importance of strategic planning, operational flexibility, and human capital management. Dr. Jumoke Aloke Malachi from Wema Bank urged leaders to drive innovations through inclusivity and engagement, while Yemi Fashion from T-Wife Talent Partners noted that successful organizational change requires a balance of technology and human resources. The event underscored the importance of adaptive strategies, leadership, and investing in human capital to overcome challenges and seize opportunities. Nigeria's increasing interest in secured investment options has driven the net asset value of mutual funds to 3.781 trillion naira in the first week of November, representing an 89.5% rise from 1.995 trillion naira during the same period in 2023. Analysts attribute this significant growth to factors such as a steady increase in the monetary policy rate, the devaluation of the naira, and other microeconomic dynamics. Data from the Securities and Exchange Commission revealed that fixed income funds played a pivotal role, contributing 47.76% of the total NAV, while money market funds followed closely, accounting for income funds ranked third with 212.5 research and investment at Fidelity Securities Limited, noted that the trend highlights a strategic move by investors to hedge against inflation and exchange rates instability. And mentorship to retailers. It seeks to enhance entrepreneurial skills, promote financial inclusion, and drive sustainable growth. According to Carlos Coutinho, Managing Director of IBPLC, thriving small businesses are vital to local economies as they generate employment and contribute to innovation. He emphasized that the GREET program aims to support retailers by offering skill training, mentorship, digital tools, financing, and other resources to help them scale and grow. Temitope Oguntokun, Corporate Affairs and Regulatory Director at IBPLC, highlighted the program's role in uplifting small and medium-sized enterprise across the value chain, noting that strengthening retailer support communities and drive sustainable growth. Nigeria's Minister of Environment, Balarabe Abbas, and the MPS Conservator General, Dr. Ibrahim Musa Goni, whose backing was instrumental in his participation in the election. He expressed gratitude for their role in making his election possible. Chris Galias, President of the IRF, emphasized the critical role of rangers in combating climate change and biodiversity loss, highlighting that without them, wildlife conservation would be severely impacted. The 10th IRF World Ranger Congress brought together over 400 rangers and conservationists from around the world for discussions on wildlife protection, sustainable practices, and the celebration of rangers' bravery, particularly those from indigenous mandatory yellow fever card for travelers to Egypt for those transiting for 12 hours or more, stressing the airline's commitment to safety. Basa expressed gratitude to travel agents for their role in boosting sales and improving services, emphasizing that importance to Egypt's air's growth in Nigeria. The airline also recognized and rewarded outstanding agents for their exceptional performance during 2023/2024. You're watching the ATN Business on Atlantic Television Network. We will be back after this break.
From the lands across the ocean to the land beyond the mountains, through the Sahara, we bring all the sport news, live analysis, expert discussions on trending stories in politics, business, socio-economic, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today, only on ATN. From the lands across the ocean to the land beyond the mountains, through the Sahara, we bring all the sport news, live analysis, expert discussions on trending stories in politics, business, socio-economic, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today, only on ATN. From the lands across the ocean
Welcome back to ATN Business and Atlantic Television Network. Now to the rest of the stories. European markets are expected to open higher on Wednesday as investors remain focused on the ongoing tensions in the Ukraine-Russia war. The UK's FTSE 100 index is forecasted to rise by 4 points to 8,106. Germany's DAX is projected to increase by 46 points to 19,108. France's CAC is set to gain 23 points to 7,252. And Italy's FTSE MIB is expected to climb 118 points to 33,567, according to data from IG. The FTSE 100 will be closely watched, especially after data showed that UK inflation rose sharply to 2.3% in October, surpassing expectations. This development comes amid global market declines on Tuesday, driven by fears over Russia's lowered nuclear strike threshold and Ukraine's use of US-made long-range ballistic missiles to target Russian territory, escalating tensions between Russia and the West. Meanwhile, Asia-Pacific markets were mostly down overnight following a mixed day on Wall Street. U.S. stock futures saw slight gains on Tuesday evening as traders anticipated Vida's upcoming earnings report. Investors are particularly interested in hearing about demand for Nvidia's Blackwell AI chips, which the company's CEO Jason Hung recently described as having insane demand. The performance of Nvidia, which has the remainder of the week. Asia-Pacific markets were mostly lower in volatile trading on Wednesday, following a mixed performance on Wall Street amid escalating geopolitical tensions between Ukraine and Russia. In Japan, export growth for October rose 3.1% year-on-year, surpassing economists' expectation and recovering from a 1.7% drop in September. However, import growth slowed to 0.4%, down from 2.1% in the previous month. Despite this positive trade data, Japan's Nikkei 225 dropped 0.16% to close at 38,352.34, and the Topix fell 0.43% to 2,698.29. In Hong Kong, the Hang Seng Index gained 0.24% in the final hour of trading, while mainland China's CSI 300 rose 0.22% to close at 3,985.77. China's central bank held its benchmark lending rate steady after reducing them in October. South Korea's Kospi rose 0.42% to 2,482.29, although the smaller Kazakh index fell 0.47% to 682.91. In the U.S., the Nasdaq gained 1.04%, closing at 18,987.47, and the S&P 500 rose 0.4% to end at 5,916.98, while the Dow Jones Industrial Average declined by 0.28%, falling 120.66 points to settle at 43,268.94. The market turmoil followed heightened tension after Russia President Vladimir Putin warned the U.S. that the threshold for nuclear weapons use had lowered. This statement came after Ukraine used U.S.-made missiles to strike the Russian border region of Bryansk, further escalating the already tense geopolitical situation. Euro, which had been above parity since September 2022 after hitting a low, is now facing renewed pressure as global markets react to escalating tensions between Russia and Ukraine. This week, the situation intensified when Russia President Vladimir Putin warned that the country had expanded the circumstances under which it would consider using nuclear weapons. The comments came in response to Ukraine's use of U.S.-made long-range missiles to strike Russian territory, a move that had been approved since U.S. President Joe Biden. The global market reaction was swift, with investors flocking to safer assets, which boosted the Japanese yen, Swiss francs, and U.S. dollar. The increasing demand for these safe haven currencies came as market participants sought protection from the heightened geopolitical risk posed by the conflict in Ukraine. As a result, the euro, already below its long-term average, is facing additional downward pressure in the short term. Jane Foley, head of FX strategy at Rabobank, commented that if these heightened tensions continue, the euro could experience a significant decline. She suggested that the escalating conflict has the potential to push euro USD below parity again, a level that had been reached earlier in the year. The prospect of the euro weakening further is concerning for European markets, which are already grappling with inflation and economic uncertainty. While the euro has been resilient resilient above parity for much of the past year, the re-emergence of geopolitical risks could undermine its stability. As Russia continues to assert its military power and make threats of nuclear retaliation, investors are becoming increasingly wary of the implication for the European economy and the currency. The ongoing volatility in the region could make it difficult for the euro to maintain its position, especially if the conflict leads to further sanctions or disruptions to trade. The situation highlights the broader challenges facing European assets as the Russian invasion of Ukraine continues to unfold. The uncertainty surrounding the war and its global impact has created a volatile environment for currencies, including the euro. If the tension between Russia and Ukraine persists, the euro could face additional downward pressure, potentially leading to a break below parity in the coming weeks. Analysts at MUFG highlighted that Asian currencies, particularly those with close ties to China, could be more vulnerable to the effects of the U.S. tariffs on Chinese goods. For example, a 60% tariff on Chinese products could lead to a significant depreciation of the Chinese yuan, with other currencies like the Singapore dollar, Malaysia ringgit, and South Korean won also at risk. On the other hand, strategists at the ING argue that the U.S. dollar is likely to strengthen due to the factors such as looser fiscal policies, higher U.S. interest rates, and protectionist policies under the new administration. They caution against overthinking the situation and suggest that a dollar rally could be expected. For European currencies, ING suggests that the euro is likely to underperform, potentially shifting into a weaker range next year, particularly against the U.S. dollar. Scandinavian currencies, Sweden krona and Norway's krona, could face downward risk, with the British pound and Swiss